Hey, welcome to Deribit Live, February 8th. I'm Shane Oglow from Rogue Traders, and this week we've got my partner Richard joining us. Was it last week or the week before you couldn't make it? I remember. It's all blur now, but
yeah, I can't remember. I'm a bit flighty. Sometimes I just don't turn up.
I basically have to babysit Richard. You know, I have to sit down, you do this, do that. But so it's just me over here. I'm at home today in the office. Got a bad hair day, but I'll get a haircut next week, I promise. Richard's on the road. You know, Richard's in, we've got to collectively convince Richard to spend more money and stay in quality hotels. I don't know, he's off in Barcelona or somewhere. He's staying in some budget hotel most likely, and probably doesn't have the best connection there.
Well, one of the problems of absolving responsibility for my life is that other people book my hotels for me, and in my best interest, they book the cheapest ones.
There you go. Okay, well, as long as you make it out alive and you catch your morning flight, I think we'll be okay. All right, everyone. Hey, great to see everyone coming in. Giandrea, lovely to see you, Andre. We've got some interesting things to talk about, and the market's actually just starting to move. Well, it started to move yesterday afternoon, evening, our time, and we were talking amongst a group of ourselves today, and I said, well, you know what, the market's poised to go higher. It could come back down to the channel, but poked its head above. I said I wouldn't be surprised to see the Americans push it up, and then maybe right back down. But if it's going to go up, it's going to go up. We're going to hit 46 pretty soon. So it's exciting times, especially for those people who like to hodl, and want the crypto, the value of crypto to increase. It's good for them. Who else we got coming to Vladimir? Great to see everyone. As a reminder, please leave any questions you have. And Stanislav, you're already asking questions. We haven't even started. We haven't even got past Richard and his hotel adventures. But that's okay. Put your questions in there. We'll try to get to them. We've got 30 minutes. So without further ado, more people still coming in. Oops. Oh, you know what I did? I think I might have just kicked Richard out somehow. I went to click the chat and I clicked attendees and I think I kicked him out. Oh, here he is. Just don't tell him what happened. All right. So Richard, what happened?
I touched something. It all went wrong. So
yeah, you're just technically. All right. Okay, everyone. Let's get rolling here. Today, same agenda as always. We're going to take a look at the current market. We're going to analyze it. We're going to look at some current trades and strategies that we've got going on in discretionary accounts, some of the discretionary accounts that we trade. And the topic of today is going to be a small account, $50 a day in profit in a flat market. Basically try to make half a basis point a day in let's say it's a $5,000 account, a small account. And it's cool because now we've broken out of that range. We've got some action. So this isn't as applicable, but it is because Bitcoin has this habit of doing a bunch of stuff and then flatlining for, a few weeks or a month and a half and not really doing much. And we still want to earn money during those periods of time. So we just got to scale it down. That's sort of what we want to focus on and talk about today. But before we get started with that, and I've only got one screen today, so I'm not going to be quite as efficient as usual. But hey, we're Shannon Richards from Rogue Trader Academy. You can check us out at roguetrader.academy. Been trading options for nearly 25 years. Hey, if you want to come and join us, hang out with us every day. We've got daily live streams, got a weekly Ask Me Anything call with our members. Got all kinds of different courses happening. You can check us out on Patreon too if you just want to watch the daily live streams where we manage a fund. We trade this fund on Deribit. It's done in conjunction with ZigDAO. So we've got this fund there. It's a retail size fund. And we just basically, it's fully transparent. We just show people how a professional manager would manage this fund. And there's two rules. There's two rules of the fund, kind of like Fight Club, but we've got two rules. Number one is no big drawdowns, no big losses, and make a profit. Because if you don't have both those things going for you, you're not going to manage a fund for too long, are you? So we've got that happening. So please feel free to check that out. All right, so let me head back to the slides. Actually, what I'll do is I'll just jump straight over into my charts. We'll take a look at the charts. Screen share.
You're going backwards here, Shane.
What?
You've gone back to the first page.
Well, that's okay.
Yeah,
I'm going to share my screen right now.
All right.
I just need to find my charts. There we are. Do we have anything going on over here in ETH? No, No, I don't. I don't have anything like, actually, I was fishing for a long down here in some of the accounts. I was going to go long the underlying. I was going to maybe look at, doing some leveraged buy-in, but I didn't get the entry, and I didn't really care. I was just kind of whatever. Bitcoin, what have I got going on? Well, if you remember last week, I put on a June 9th. So this expires tomorrow, Friday, and Friday is the big expiry. It's a pretty big expiry. I put on a 1x2 call spread. So I bought the 43,500 and I sold the 46,000. I don't want to say this is the perfect trade, but
it's looking pretty good.
Yeah. I mean, maybe the gods will shine on me, and this will expire at 45,999, and I will extract every cent out of this. No, I'm not going to count on that, of course. I don't think I've ever had that happen.
Yeah.
But
let's speak to you about it. They'll hear you.
Yeah. Shh, be quiet. Yeah. Yeah, but it's looking pretty good. I mean, overall, we've been mildly bullish. We think that we're probably going to see a price appreciation over time. We don't expect any 15-20% moves overnight. At least I don't, although anything can happen. When we get dips, it's like, for instance, down here, it kind of scared the pants off some people. We sold a lot of puts, put us under some pressure, but boy, we sucked in that value. I don't think there's any accounts we're managing which isn't at or very near all-time highs. So I
think just prior to today, we were at all-time highs. I mean, today we're a bit off because vols are up a bit and we're short vol, but yeah. Sure.
Yeah, it's been pretty good trading because we haven't had a one-sided heavy moving market, which is always tough for option sellers.
Also worth saying, Shane, you just said that we're not expecting a 20% move. However, even though we're not expecting it, we always hedge for it. We always put the cover in. Absolutely,
and in fact, later on, I'll share, because I don't think you can share your screen because your computer died and you're on your iPad.
I'm on an iPad. If I touch the screen, it's all going to go wrong.
Yeah. Okay. So I'll share that. People see. I think in that account that I think we have some wing protection there, but we'll talk about that. Yeah, that's something that we sort of always do, is sort of a daily discipline. But we'll talk about that a bit later. So what else do I have going on? I got this nice call spread. I'm going to leave this on. I'm going to let this go right into expiry. Hey, who knows? I'm just going to let it go into expiry. I might end up rolling some of it, but probably not. I might just let it go and die out. What have I got going on here? Well, I've got some things that are under a bit of pressure. So I've got some 45,000 to about 46,000 going out to the 16th. So right here, sort of that box, I've got some short calls there. I've also got some short puts starting at, I think, 43, yeah, because it was right in the middle of the trend line. Yeah. So right around here down to 42. Now, I don't have that many puts. And why do I have those puts? They actually were just put on within the last day, because as I was adjusting positions, I had some 44s short, or 44 and a halves, or whatever it was. Sometimes I'll split things out into various configurations of strangles, and I got a bit of value for some of these puts, but not a lot. So I wouldn't want to sell a lot, because if it comes back down, then it'll look pretty ugly. But I like to split some of that risk off, not just into calls, but also there. So if I go a little further in time, I don't have a lot more further. I've got some March. I do have some March. I've got a short strangle out here, 36,000 puts down here, and the 55,000 calls, short calls. Again, this is just in one of the discretionary accounts I decided to use for Deribit. So not a lot going on. Now, what I like about this right now, I'm generally only selling short-dated stuff when it comes to cryptocurrency options. We're talking TradFi. We're going to be doing stuff 2 months out, 3 months out. Fine. That's fine. I don't like that. In March, June, I don't know what crypto is going to be. It could be at 70,000, maybe 20,000. I don't know.
So there's too much Vega risk in crypto. 2 months out, you're at the, you might be earning, I don't know, $1,000 a day in theta, but you'll be short $1,000 a tick on Vega, and that can end you, right?
Yes, it always seems you never seem to actually collect and realize the intrinsic value. So on those longer dated things, it gets a bit frustrating. So right now in crypto, I'm doing a lot of short dated stuff, 1, 2, 3 days out, a week out. And if I after this call, I might come over and I might need to manage some of these trades. I've already moved some of the 45,000s out, but I've still got a bit of time. I don't want to get too panicky. I've got no problem because I've got a new expiry coming out every day, and I see the March. We've got March 1st out. I think it's March 1st expiry came out today. I've got lots of places to roll to. I've got lots of options. So when you do this short dated stuff, it's like you can continue to do this, and whoop, you get to suck in all that equity as soon as the market turns your way. So it's kind of nice. You don't have to wait 30 days or 60 days, which is it's a bit frustrating.
And also, if you do get a vol spike, which always comes with a move, particularly an up move in Bitcoin, then the relative damage to the short dated positions or short dated short positions isn't anywhere near as bad as the long dated ones. So you can roll your short dated shrapnel into longer dated strangles or 1x2 diagonals or 1x1 diagonals, whatever you want to do.
Yep.
And you actually pick up the vol as it rises. So you're almost averaging into the vol, but without too much damage to your margin.
Yeah, you're 100% right, and it's just easier. It's just easier. So, and as you'll see, for me, rolling is kind of easy because I've already got short dated protection in place that I bought dirt cheap. So for me to roll into a new position, I don't have to then buy protection for that new date, and you'll see that in just a moment. Let me share the screen here, and I go to Deribit. All right, so this is the publicly visible account that anyone can watch or join or put money in or whatever. We're not soliciting funds for this. This is what we use it for demonstration. And we started us off with $5,000 a couple months back, and we're up about 10%, so it's kind of nice. And we let's face it, we had some challenges when we opened this account. In the next 30 days, we ran up 30%. Like, oh my gosh,
And we were short because we were flat delta, weren't we? So we sat there with, it was a bit of a. But a really good lesson, actually, because if you watch back through all the Patreon episodes of how we manage it, we basically got through 30 days of a massive rally while we're short the market and short vol, and we didn't lose any money.
Yeah. So and that's what the daily live streams is we're managing this account daily live stream. So if you want to check that out, hang out with us. We do a live stream every day, at least once a day. Sometimes we'll do it on a weekend if the weekend warrants it. But anyways. Hey, look here, T-vol's rising a bit with this little spike up. So we're up to session highs, just over 45. So let's see what happens. We still got a ways to go before we get back up to some highs we saw at the end of January. But we'll see what happens. What else did I want to talk about? Actually, I'm just going to quickly take a look. If you go to Trading Tools here, top left, you can take a look at the volatility surface. Got this big short-term spike on the calls. This is probably tomorrow's expiry, but we've got the rest of the surface is looking kind of nice. It's kind of skewed normally the way we expect Bitcoin to be traditionally. It's always got a skew to the upside, and it's still there. So let me just go over to the options, and so we don't have anything expiring tomorrow. What do I want to talk about here specifically? Oh yeah, rolling. So here we go. We've got this 45,500. So maybe it's going to press us. Maybe Bitcoin's going to keep going up. Who knows? Maybe it'll be 45,500. And we decide we want to roll this. Well, this is the 10th, right? So a lot of times what I'll do is I'll roll into the same expiry. So I'll just roll it up, not out in time, just up. So obviously, if I can buy this back for $1 right now, I've got to sell more than 2 of the 46,500 to give me another $1,000 of leeway, and there still would be a slight debit, right? So you've got to increase the amount of risk. So, but sometimes I'll do that. Sometimes I'll do 1. Sometimes I'll do 2, depending. Sometimes I'll strangle it out. Oops. Sometimes I'll throw on a put over here, or I'll do a bit of both. Where I'll let's say I sell the 60 or the 40, just 1. But I still got to make up the rest of that. Well, I'll go to the next day. What is this? The 10th?
What's the tenor here? Oh, the 10th. Yeah, there's not enough smile to do 1x2s at the moment. When the smile steepens up, then you can actually get 1x2s at a small credit. and it's worth
That's
doing.
right.
But yeah, you're going to have to trade some time for premium.
Yeah. So here, like Richard's saying, I can trade some time. I can say, all right, it hits my 45,500. Well, to make up that extra 50, basis points, I can be here at 46,500. But I add an extra day on there. But look up here. I've already got some protection. It's a little bit farther away, but if we spike up to 47.48, this can become relevant. I bought this cheap wing protection on both sides earlier for next to nothing. It cost me literally pennies to do it, but it just makes that rolling easier. So when I anticipate I might have to start rolling, I'll buy that protection in advance, right? I can see, yes, we do have the March 1st contract open, which is looking pretty juicy. So if I'm getting in trouble on the 9th or the 10th on these expires, look, I can go to the 11th. I can go to the 16th. I can go to the 23rd. I can go to the 1st. The 1st isn't that far away. The 1st is only 21 days away. Now, that's a little bit far, but I can push. Is the price of Bitcoin going to keep pushing all of this and put pressure on? It might. It's done that before. It would. But chances are we're going to go up there. It's going to have a pause. We're going to go down in price a little bit. We're going to have breaks. It won't usually just be a one-sided move. So that's the beauty of having that short-dated protection in there when you need it. Now, a lot of that just going to expire worthlessly, and that's okay. So we're using it as the backstop. We're using it as the protection in case of, let's say we get a black swan, a multi-standard deviation event. Boom, we move 20% for some big news play. Great. We've got that wing protection in place to either mitigate damage or maybe even make some good money. We've got that there if we want to build spreads out of it. And the third reason is it's helping us on the margin. The margin engine loves it, right? Because we're limiting risk. So there's sort of three advantages there that we really, really like. Let me just go back here.
Yeah, what's the theta on this account, Shane? Just to...
Here, let me just go down there and I'll just check it out. So on this account, the theta is $30 a day right now. So it's a little low for what we want. But I was
going to say we're pulling in 60 basis points of value each day using only 30% margin, and that's because your protection was in there.
Yeah. So, and I guess we're going to sort of segue into the making $50 a day in a flat market. Like we were going sideways. Right, we were going sideways for quite some time, but we still were maintaining a decent amount of theta decay, and our account equity just kept creeping up. But we weren't overcommitting ourselves. You don't want to be selling vol at 35 when there's a good chance it could spike to 45 the next day. You're going to get hosed a little bit. You're going to have to manage, and you have to push those profits further down the road to realize them. And that's sort of the life of an option seller, where you're just sort of constantly massaging it. It's kind of exciting. We're going to get pressed on the calls, but don't be surprised if next week we're going to get pressed on our puts. You kind of swing back and forth, and you just manage it. The only thing that kind of really hurts an option seller is long sustained moves, which move rapidly. If it moves slowly goes up over time, it's a piece of cake. It's wonderful. It's great because our intrinsic value or the underlying value is increasing, and we're collecting all that premium. We're realizing the intrinsic value of all that premium. What was I going to say? Here in this account, we're trying to do, $50 a day is sort of our target. Now this fluctuates. We get some things expiring off, we buy some options back cheap, and then we got to pile them on. So we're kind of going from sort of 25 up to 65, maybe sometimes 70 at an extreme.
So it is worth saying, Shane, that it's low at the moment because vols were below 45, and we have this kind of rule of thumb that we really scale down our risk when vols are low because we're selling vol, right? So the last thing we want to be doing is selling loads of vol at the bottom.
Yeah.
But at the same time, we don't know how long the vol's going to stay low, so we want to make something. And it means that when vols start to rise again, like they are now, we're going to tread water, or maybe even take a small mark to market loss. But actually, what we're doing is building up intrinsic value, and then that builds up the theta, and eventually all that comes to us over the days. And so that theta currently, $30, will go up to, as you say, 80, maybe 90, maybe even 100.
Mm-hmm.
But that's only possible if you've put in the protection before. Otherwise, the margin engine just won't let you do it.
Yeah. Yeah, and it's frustrating if you sold too much vol at a low price and it spikes up, and let's say it stays up for a week or two, and you're sort of handcuffed. You're not able to take advantage of it. So we want to scale in as if, let's say this keeps moving up and we end up at 47, 48, or 50 over the next week. Well, we will want to have scaled into that. We don't know where it's going to stop, and then we'll manage it to start realizing and pulling that intrinsic in. Richard, I didn't really talk so much about the $50 a day. Is there any particular aspect of the strategy you want to share?
Yeah. I was just going to say, if you look again at the Greeks, you'll see that the theta is $30 a day currently, but the Vega is only 19, 20. And so we're really careful to control Vega. Now, once vols get up to sort of 50, 55, then we're happy to take on more Vega. So we'll actually sell more longer dated positions on the basis that the vol will crush eventually, and then we'll get paid twice. We'll get paid on theta and paid on Vega. But the last thing we want to be doing is sort of showing negative P&Ls while vol is going from low to high, because all we're doing is getting artificially marked down, mark to market, even though we're not actually losing any money.
Mm-hmm.
But the MTMs look bad, and given that we're publishing our P&L, and this is part of the game, I think, of fund management, you've got to not scare your clients. Even though you as an options trader know that as long as your intrinsic value never gets lower and your margin never runs out, you'll always win. But your clients don't know that, so you've got to keep everyone comfortable.
Yeah, that's a good point, and that's another reason why we've been avoiding selling any long dated stuff lately. Is it really sucks if you're selling long dated stuff at a low vol.
Yeah,
it's
you've got three months of pain to wait to get rid of it, and then you might have to roll it again, and it's a nightmare. The only advantage, the one thing is, I would say about trading in March when you're in January, is that the smile's a bit more pronounced, or you can feel it a bit more. So things like 1x2 adjustments are actually easier when you're a bit longer dated, but you don't want to be doing a 1x2 too often, because that soon becomes geometric, becomes a 2x4, 4x8, and suddenly you're on margin call. So you want to be sometimes you do a 1x2 if you think you're near the top of the rally or the bottom of the dip, and then if it's getting a bit too much, you split it into a strangle or flip the sides or risk reversal, whatever you want to whatever you need to do. You've got some really good questions here, by the way.
Yeah, cool. Well, we got 5 minutes. Let's get into questions. So I hope that was clear. We kind of had that $50 a day. The market wasn't doing much. And for all we know, it could have stayed this way to the end of March. Who knows, right? Nobody really knows. But you want to be cautious. But it sucks if you're just an option buyer. Yes, you can have explosive gains from time to time. Yes, absolutely. But you got to be right on timing and direction. Here, we want to make money no matter what the market conditions. And we accept the fact that sometimes the market's going to do stupid things, and we're going to have to delay that profit for a period of time while we manage it. And it's all the art of just sort of massaging that to bring it in as soon as we can without risking too much, keeping margin under control, and being able to jump on those advantages when we do get those vol spikes. Okay, Stanislav. What is the minimum capital required to trade Bitcoin options, at least be able to rebuild the sold positions?
I would say about $5,000. I mean, what we're doing in the Zigno account, right?
Yeah, I think that's a good number. I mean, you're not going to live off that. You're not going to make a living off $5,000. If you need to make $5,000 a month to live off of, that's not reasonable.
Not everyone has your extravagant lifestyle, Shane. Sometimes some people can live off $50 a day.
Yeah. but you know what I mean? Like you don't want to push it. You never want to. I've been in the situation in the past where my trading account had to make a certain amount every single month, otherwise there's in big trouble. That's not a nice position to be in, because you're making trades you shouldn't make.
Yeah, I've been there too. I've told the story before online, but I allowed my cost base to grow in line with my earnings in the good times, and then when the bad times hit, I still had the cost base there and had to make trades to try and make a living, and that got me into all kinds of trouble.
Yeah.
So you got to size your lifestyle with the market. The market gives and the market takes away. So you've got to roll with it and be flexible. Ideally, you don't have your only income from trading. You just do something else as well. Do something useful with your time.
Trading is very useful. All right, question from Azat. Do you rely on any model predictions or system for doing your enter and exit decisions? Do you do options pricing? How do you define your volatility and other parameters for the formulas?
It's pretty easy. So the short answer is kind of no, but also kind of yes. So in terms of the model, we accept the market's pricing model, which is basically smile Black-Scholes. We kind of accept what the market gives us in terms of the implied volatility, because we have to, because no one's going to trade with us if we're off market. But what we actually do is we control the size of our positions and the shape of our book in response to the prices we're seeing in the market, and also the deltas we're carrying and the momentum we're seeing. So we do use a little bit of sort of charting, courtesy of Shane, to get a feel for where the pain points of the markets are and where the explosion points are. We also mix in my modelling, which is looking at estimating where dealer brokers are long and short gamma in the market. Because if those guys are short gamma, you know that the price is going to blast through a strike when they also hedge it. And if those guys are long gamma heavily, then you know it's going to stick at that strike. So we mix the intel from the market, the flows, what we're reading, what Shane's saying, what I'm inferring, and then we look at the news flow and invert it and do the opposite. Because all the news in crypto is always late or bullshit. And actually in the wider market generally, people only write news if they want you to wrong foot you.
Yeah, great. And just to quickly add on to that, Azat, really, there are times when we will go long. When like, hey, this is a beautiful entry. We're gonna buy a debit spread, or just be long naked, whatever. But for the most part, we're selling to earn money, probably 9% of the time, and we will use technicals and other support and resistance parameters. Can I invest in your retail fund? Well, actually, it will be available. So
well, let's be clear here. It's not a fund in the sense of a legal fund structure. ZigDAO is a company that runs this idea where you can give them your money and ask them to allocate your money to people trading books. So that's a subject for you and them. We use them because they allow us to publish our P&Ls, and so we felt it was a useful sort of platform for that. But I think if you were to contact them, you could put money in and back us, but we're not inviting you to.
Yeah, this isn't a solicitation in any way. This is just a way for us to be publicly visible. Now, ZigDAO was always just sort of a crypto place. They've just started options, and literally we were the first ones to start with them. I don't even know if we're publicly, if they're showing us yet. And in fact, we have a meeting with them next week, and they're going to have option choice. So you can go in there, you can see performance of people, and back whoever you want. It's so when I say it's a fund, I guess it is kind of, but it's not a legal fund, as Richard said.
And also, if you want to do what we're doing without understanding it, which I wouldn't recommend. So first of all, I would recommend joining the Rogue Trader Academy and doing our courses and getting our tutorship. But if you can't be bothered with that, you can spend $2 a day to get the Patreon feed, and you can literally see us making the trades as we're making them. And if you wanted to copy them, again, we would advise you not to. You feel free to do whatever you want to do, right?
Yeah. So we're running short on time here, but yeah, you can check out ZigDAO. I put the information down below. They're a cool company. They got stuff going on. Maybe there's other things you're interested. I don't know. Again, this isn't a sales pitch. This is just trying to teach people what we do. Chris, Vladimir, which sizings of those? I think you meant to say wings protection should I buy? Assuming I'm selling short calls or puts with one Bitcoin sizing. So, hey, I'm just going to generally say 1 to 1, at minimum.
At least one, yeah. At least one. Maybe, if you can afford it, get to. So as the price comes down, get to.
Yeah.
You never know when you're going to need it. If you can get wing protection at 1 basis point or 2 basis points, per day, take it.
It's like $4 a Bitcoin. It's nothing. It's nothing. Yeah. And, and I'll usually smear those strikes out. So I'll buy a few on the puts and a few on the calls, maybe starting at 8%, maybe 10%, 12%, whatever. And I don't expect them to ever pay me or do anything. They're there for margin protection. They're there for.
Yeah, it's really important to say, right? That wing protection almost never gets in the money. It's not there to make you money. It's there to stop the margin engine from blowing you out when the market moves against you.
Yeah. Dutch, so to understand correctly, you publish your P&L as your result, not your equity value.
We actually, I think ZigDAO publishes the P&L, but that's the same. That's the same number, isn't it? In Deribit.
I think so. Yeah, and I'm sure ZigDAO just does US dollars. They just show US dollar performance. Yeah. But again, this is all kind of new, and that will be online very soon. So hopefully we'll have some news next week.
Again, if you follow us on Patreon, then you can actually have a look. As we mouse over the equity value and the dollar value and so on. So that book we're trading to earn dollars. Because that kind of makes sense to us, but you can also use the similar strategies to trade to earn bitcoins, right? A lot of people ask me that. I manage books for institutions, and a few of them like to accumulate bitcoins rather than dollars.
Yeah, absolutely. What was I going to say with the question from Peter? I'll remember that. What was I going to think earlier? How do you define position sizing in small accounts? Most of the times selling short-dated ETH spreads is just for a couple of bucks. It's really hard to grow a small account on $5 to $10 credits with some risk included. So any thoughts about position sizing for short-dated options?
Well, when vol's below 45, we don't like making more than half a basis point of net asset value per day. And when vol's up in the 70s or 80s, we're happy to let that expand out to maybe 1.5, 2 basis points a day. Sometimes an extremist 3, but that's when we get put there. We don't choose to be there. So it's kind of a rule of thumb, and it's kind of related. The amount of money you're making is related to the current implied volatility in the market. That also will influence how much margin you're using, and you need to make sure you leave yourself enough margin to recover if there's a move against you. So So a good rule of thumb is if you make no more than half a basis point per day of your net asset value, 50 basis points a day, so 0.5% per day of your net book value, then you shouldn't go wrong as long as you've covered your positions and bought some tail risk.
And for those who are new to our philosophy, we generally try and keep margin under 30% if we can. That's a nice sort of general rule of thumb. So you've always got some powder dry in case the market goes crazy. You can manage and adjust and take advantage of it. A question from Shitha. Sorry if I said your name wrong. Minimum amount for trade. We covered that. I think that if you're talking about the account size, I think having at least 5,000 is probably where we really want to start to see results. Of course, you can start with smaller. But I think 5,000 is a nice starting point.
It comes down to the fact that the minimum Bitcoin option quantity is 0.1 Bitcoins, right? So that's the contract size. So that's $3,000. Well, it's actually no, $4,000 now per contract. So
you could trade ETH, but yeah.
Yeah, okay. But even then, it's still because it's still 1 ETH per. So maybe you could get away with $3,000 on ETH, maybe. But ETH is a bit more. It's a bit more unpredictable, so maybe you can't. 5,000 is probably a good rule of thumb.
I agree. It kind of the same in the equity world too. You want to start trading futures. I always tell people, hey, probably 5K is a good starting point. We can do micros. Anyways, a follow-up question from her: what's the difference between this and Binance options? I don't trade on Binance. Do you do much over there?
I don't.
I think they have smaller size minimum. I think they have a 0.01. I think.
I don't think there's. I mean, in terms of actual difference, there's no difference, right? In the end, the contracts do the same things.
And Deribit's the biggest. Deribit's the biggest game in town. It's got the most liquidity.
Everyone puts all. I mean, if you want to see what's driving the options market, and you do, because the options market, particularly for the past 6 months or 9 months, has been driving the spot market, you definitely want to know where the open interest is on Deribit. Deribit and CME kind of define where the market's going to move.
Okay, and we're way over time here. Sorry about that. We try to keep to 30 minutes. A couple more questions. We're going to blast through a minute. We'll be done. Question from Volodymyr. Additional question about which terms to buy on those wings. 2 weeks, 1 month. Sorry. Hey, whatever you want. I mean, I always buy every day a new option comes out, which is 3 days ahead. I'm always picking up some of that. Does that mean I'm not picking up 1 week or 1 month? Sure. If it's a good value, so for instance, we're moving up in the market. I don't see the market right now. What a great time to buy some cheap puts relatively, whether that's in a week or the end of February, because they're cheap. They might expire. They might not have any play in what I'm doing. But if the market reverses and comes down a few $1,000, I can use those now. So it's all relative. You just want to identify those values. But short-term wing protection, I've always got them on 1, 2, 3 days out, whatever. You don't need to have every day loaded, but that's what I do. Richard,
as soon as that new 3-day contract comes on, we go in there and we bid one basis point for anything that's 10% or below, away from the money. And often we get hit, and we'll actually pick up protection for 1 bit for 3 days. Sometimes we've got to pay two bips, sometimes 3 bips. But look, I'm totally happy to pay 2 bips a day for protection on a book that's paying me 100 bips a day. Of course I am, right? And also we're also covering, every time we write a strangle, we're also covering that strangle in the same expiry. So if that's 2 weeks out or a month out, we're covering it there. That chews up a lot of our profit, or our, in quotes, profit. But the reality is, if you do that, rather than sell naked, you can get a lot more risk on, and you can get your profit out faster.
Yeah, 100%. And those. So let's say we sell a strangle 2 weeks out. So we've got some protection there. As that comes closer and closer, we might be adding to it depending on what the market's doing. So it's a very, very fluid. There was a question here. Oh, I think you moved it. Oh, from Galen. Last one. Sorry to run so long over time. Will there be recording of this session? Absolutely, there will be. Deribit puts it on their YouTube channel, and we put it on our YouTube channel as well. So you can go over to Deribit or to Rogue Trader Academy YouTube channel. We usually have it up there within an hour or so after we're finished, maybe a couple hours, depending if I have to pick up the kids or something crazy. So that's it for today. Hey, again, thanks everyone so much for being with us. Always a lot of fun. A lot of great questions today. Market's starting to finally move, so let's see what happens over the rest of the day and the week, and we'll see you guys next week.
Cool. Thanks for coming, guys.